Okay, I think we can start proper. We have a good number of participants. Good morning, good afternoon, and welcome to this webinar to launch the Index Insurance Best Practices for Insurance Regulators and Practitioners in the Pacific. I'm Akata Taito, the Inclusive Insurance Solutions Hub Coordinator at the Pacific Insurance and Climate Adaptation Program, and I will be your moderator for this webinar. We thank all our participants connecting from different parts of the world. Before we start proper, let me just quickly take you through our agenda, and for participants' information, just taking note of slight changes to our speakers due to regrettable circumstances. Our thoughts and prayers are with the Governor of the Central Bank of Samoa, Ms. Atalina Ainuenari, and her family, and our well wishes with Ms. Hannah Grant, Head of Secretariat for Access to Insurance Initiative, who were not able to join us today. We are fortunate to, however, have with us Mr. Manoj Pandey, Senior Advisor to the Secretariat at Access to Insurance Initiative. And as per the initial program, the last part of our agenda is a technical presentation on this relevant and timely knowledge product from Mr. Agrotosh Mookerjee, followed by a Q&A session. So that is a run through of our program. Please allow me to start proper with our welcoming remarks. Senior Advisor to the Secretariat at Access to Insurance Initiative, Mr. Manoj Pandey. Our Assistant Governor Policy of the Central Bank of Samoa, Mr. Benjamin Pereira, Mr. Agrotosh Mookerjee, Managing Director and Chief Actuary Risk Shield Consultant Limited, Excellencies, heads and representatives of the private sector and public sector, and to fellow participants. Nisambula Vinaka, good evening from Fiji, and a very warm welcome to this virtual launching of the Index Insurance Best Practices for Insurance Regulators and Practitioners in the Pacific region. This event is organized by the UN Capital Development Fund's Pacific Insurance and Climate Adaptation Program. This is a joint program implemented by UNCDF, the UN's development program, and the UN University Institute for Environment and Human Security. We acknowledge the support of our funding partners, namely the Government of New Zealand and Australia, Government of Luxembourg through the Drua Incubator, and India UN Development Partnership Fund, administered by the UN Office for South-South Cooperation. The knowledge product that we are launching today is an important part of the program's overall agenda on supporting the development of climate and disaster risk financing and insurance in the region. The publication itself is a collaboration between UNCDF, Access to Insurance Initiative, and Risk Shield Consultants Limited. At this juncture, we also acknowledge the tremendous support and commitment of fellow regulators and practitioners in the region who have contributed to this comprehensive resource. Key insights and best practices from numerous jurisdictions covering aspects of regulations to practitioners and through to consumer protection and education are underlined in this report. And so we encourage relevant players to use this report to guide the development of index insurance in your respective geographies. Last but not the least, on behalf of the program and UNCDF, I would like to acknowledge our esteemed speakers for availing their valuable time for this event. I also thank all our participants for taking your time to join us, and we look forward to an engaging session ahead. With these few words, please allow me to play a short video from Ms. Preeti Sinha, our Executive Secretary of the UNCDF, delivering her keynote address. Unfortunately, it is wee hours for Ms. Sinha's current location, but we appreciate her preparing a recording for us.
Before I begin my remarks, I would like to make the following acknowledgements. The Governor of the Central Bank of Samoa, Maeva Atalina Emma Ainuenari, senior officials representing central banks and government ministries, CEOs and officials from the private sector, representatives from NGOs, CSOs, cooperatives, and partner agencies, UN colleagues, media representatives, and invited guests. My greetings to you all. I'm honored to address this gathering on behalf of the UN Capital Development Fund, UNCDF, to launch the Indexed Insurance Best Practice Guidelines for insurance regulators and practitioners in the Pacific Island countries. I would like to start by reiterating what I wrote in the report's foreword. This is a comprehensive, well-researched, and unique document that sheds light on an emerging concept in the Pacific's insurance space, that is, index insurance. Index insurance has been identified as an effective disaster risk management and coping tools for developing countries facing the brunt of climate change. We know that the impacts of extreme weather events weigh heavily on the minds of all Pacific Islanders. Report after report has detailed how these impacts will intensify in the coming years, putting the most vulnerable at heightened risk. What does this vulnerability mean? Simply that this specific group of people will suffer more than others during natural disasters due to reasons beyond their control. The lack of access to financing instruments or climate and disaster risk insurance compounds these vulnerabilities in a significant ways. In Fiji, insurance uptake stands at 15%, and multiple UNCDF demand-side surveys indicate similar trends across the region. In Solomon Islands, for example, insurance coverage in the lowest income segments accounted for less than 3% of respondents. In Tonga, almost 90% of the respondents did not have insurance. Similarly, in Vanuatu, only 5% of the respondents subscribe to any type of insurance products. These figures are acutely low compared to international benchmarks. The studies also show that the uninsured very often engage in risky financial coping measures in the aftermath of extreme weather event. Some are forced to dip into whatever little savings they may have. Others sell off critical livelihood assets just to meet their immediate financial needs. Many fall victim to loan sharks who are ever ready to exploit disaster situations for their own benefit. These figures also present regional insurance stakeholders with a very real opportunity to tailor solutions to the specific needs of vulnerable groups. And the region's leaders have spoken eloquently in global forums about the urgent need for solutions to respond to the climate crisis. We strongly believe that index insurance has immense potential in this regard, provided the right regulatory conditions are in place. For example, the Regulatory Practice Guideline highlights the importance of reinsurance and co-insurance for the Pacific Island countries, particularly as consumer protection measures are similarly lacking in most Pacific nations. The report draws on international best practices to provide guidance to insurance stakeholders in the region on how these areas can strengthen for maximum benefit. There are further details on product designing, piloting and testing, distribution and marketing. The central theme in all of the recommendations outlined in the report is to foster an enabling regulatory environment in the Pacific that makes insurance more accessible for the traditionally uninsured. Index insurance can also aid efforts against climate change. Given the wide scope of innovation that it offers, UNCDF, through its flagship Pacific Insurance and Climate Adaptation Program, PCAP, has developed a unique parametric microinsurance product that payouts benefits based on predetermined triggers like cyclonic storms. In fact, I have been informed that 1,388 households were covered under the product last year, and the plan is to increase this figure to 4,000 households before Fiji's next cyclone cycle. Additionally, there are also plans to expand to other Pacific SIDS, Tonga, Vanuatu in 2022, and to Samoa and Solomon Islands in 2023. This means more Pacific Islanders will be insured against cyclonic storms and other extreme weather events. thereby increasing their financial preparedness and resilience. Additionally, there is similar scope to develop weather index and yield index crop insurance products, hybrid products, and non-meteorological natural disaster risk products. On this point, I would like to take this opportunity to thank the Fijian government for removing the VAT on the premiums of PCAP's products and the Reserve Bank of Fiji for including it in its regulatory sandbox. I would like to close by extending my profound congratulations to my Pacific colleagues, as well as to the Access to Insurance Initiative for developing a forward-looking publication that I am sure will inform the insurance market, not only in the Pacific, but other developing markets for many years to come. Disaster risk financing in the face of growing economic and social impact of extreme weather events is an extremely important part of UNCDF's global climate agenda and programming. Today's event is hopefully a powerful demonstration of this point. Rest assured, we will stand side by side with you on this journey to develop a more informed and mature insurance market in your countries and regions, with effective and enabling regulations to boot. Thank you very much, and I'm wishing you all the best.
Thank you. That is a very encouraging and supporting message from the UNCDF's Executive Secretary, Ms. Preeti Sinha. I will now invite Mr. Manoj Pandey, Advisor to the Secretariat at Access to Insurance Initiative, for his special address. Mr. Pandey, the floor is yours.
Thank you, Akata. And my acknowledgements to Assistant Governor Benjamin Pereira, Central Bank of Samoa, Preeti Sinha, Executive Secretary of the UNCDF, Agrotosh Mookerjee, Risk Shield Consulting, honored governors, supervisors, and regulators from the Pacific nations jurisdictions, esteemed guests from the private sector, and colleagues. It gives me immense pleasure to provide my remarks on behalf of A2II for the Index Insurance Best Practices for Insurance Regulators and Practitioners in the Pacific Island countries report launch. It is a pioneering effort by UNCDF's flagship Pacific Insurance and Climate Adaptation Program, PCAP, with which the Access to Insurance Initiative has been privileged to have had the opportunity to partner for this publication. The commitment and support provided by central banks from the Pacific region must also be acknowledged as having contributed to the success of this venture. A2II firmly believes that when supported by enabling regulation, index-based insurance has the potential to thrive as a risk financing mechanism against weather and catastrophic risks. Through lowering the administrative costs associated with the provision of insurance, it can be a key tool for closing the protection gap. It could also become a major ally for governments committed to reaching the United Nations Sustainable Development Goals, and is a key component for addressing climate change, achieving food security. Index-based insurance has also demonstrated that it can build resilience by enabling consumers to access finance and can increase productivity and income, thereby reducing poverty and vulnerability. Although index insurance solutions have been around for a number of years, supervisory frameworks to support their development and ensuring consumer protection are still in the early stages of their evolution and development. A2II, as an implementation arm of the International Association of Insurance Supervisors, was brought into existence to meet the need to build the capacities of insurance supervisors and regulators to create enabling market conditions for successful, inclusive insurance interventions. Today, the same need for information and capacity building, but on how to better regulate and encourage index insurance-based solutions is widely recognized, especially in emerging markets. A2II has in 2018 and 2020 undertaken 2 reviews of supervisory approaches to index insurance, identifying regulatory and supervisory challenges faced by supervisors, especially from emerging markets. A2II followed these reviews with public dialogues and peer exchanges among supervisors on recognition of index insurance within their existing insurance legal and regulatory frameworks. In addition to this, A2II offers a training module for insurance supervisors on supervision of climate-related risks in the insurance sector to build their capacities on integrating climate risk considerations into insurance regulatory frameworks, as well as on enabling them on capacities to engage with insurers to highlight the impact of climate change on business profiles and portfolios. These best practices build on A2II's ongoing efforts and are a step in the right direction for meeting this need in a practical, considered, and effective manner, and will be of high value to insurance supervisors, not just in the Pacific, but globally when dealing with index insurance. The report identifies and documents best practices in managing index-based insurance solutions, covering different aspects of supervision, such as prudential requirements, legal considerations, design and distribution strategies, and also aspects of consumer education and protection. It is thus a comprehensive and informative document. Also, the fact that the best practices are drawn from different markets across the world with a specific focus on the 10 Pacific Island countries grounds the report in reality and ensures that they will be an important reference source for insurance supervisors and regulators as they go about their important task of supervising the successful implementation of index-based solutions in their jurisdictions. I would again like to congratulate all the colleagues from the UNCDF and A2II who worked on this very relevant and needed work. A2II wholeheartedly encourages insurance supervisors from the Pacific Island countries and globally to take advantage of this important resource. Good luck and thank you.
Thank you, Mr. Pandey, for your kind and informative remarks, and we truly appreciate you joining us for this event. Ladies and gentlemen, as we progress, please feel free to post your questions or your comments on the Q&A or the chat box. We move on to the next item on our agenda. Please allow us to share a video from Mr. Benjamin Pereira, Assistant Governor Policy for the Central Bank of Samoa, for his special address.
Ms. Preeti Sinha, Executive Secretary, United Nations Capital Development Fund, Ms. Hannah Grant, Head of the Secretariat and Access to Insurance Initiative, fellow central bank governors and senior officials, CEOs and officials from the private sector, representatives from non-governmental organizations, civil societies organizations, cooperative and partner agencies, media representatives, and invited guests. A very warm welcome to you all. It is my pleasure and honor to be part of this very important event. This illuminating report fuels an information camp that has existed for some time in insurance sectors across the region. I acknowledge and thank the UN Capital Development Fund for the kind invitation and the opportunity to share my views as a Pacific financial regulator. UNCDF's pioneering work in putting together this pertinent, timely, meticulously researched knowledge product comes at an important time. Insurance industries across Pacific jurisdictions are growing every day, as evidenced by the introduction of new products and the steadily increasing uptake of insurance more generally. These are most encouraging developments, not only from a business point of view, but also in the pursuit of fostering a more financially secure and stable region as a foundation of economic prosperity. As we grow, however, there is increased demand on the industry to play a more active and robust role in developing solutions that respond to the region's many pressing challenges. One of the greatest challenges of our time is climate change and its associated challenges. Natural disasters are becoming more intense and frequent, There is no doubt about it. 6 countries from the region are among the world's top 20 most disaster-prone countries according to the World Risk Report 2021. Vanuatu, Solomon Islands, and Tonga are ranked in the top 3, closely followed by Papua New Guinea, Fiji, and Kiribati. While Samoa, ranked 109, has been slightly less exposed to climate-related events in the last decade, we are still a highly vulnerable country due to the lack of adaptive capacity and coping strategies. The question for us is, how can insurance be leveraged to insulate and improve the adaptive capacities of our communities, especially the most vulnerable? One area increasingly being explored is index insurance, an innovative anticipatory instrument that pays out benefits based on predetermined triggers such as rainfall and wind speed. It is an area that holds much promise, especially when combined with the benefits and protections offered by microinsurance to low-income and vulnerable households at the micro, meso, and macro levels. The regulatory practice guideline provides important information on how insurance stakeholders can create a conducive and safe environment that encourages greater investment in the development of index insurance products. I personally found the analysis on basis risks most interesting, as this is a major element of index insurance product design that needs to be closely considered and creatively addressed. The publication summarizes the current regulatory environment in Pacific countries and presents regulatory best practice guidance notes for consideration by regions regulators in Pacific countries, specifically for index insurance products. In addition, legal reviews of insurance acts in selected countries are also included in the annex of this report. The objective of the report is to deepen the understanding of index insurance in the region and provide guidance to regulators about their role in supporting developments in this space. All this is geared towards the all-important goal of increasing insurance uptake among low-income households in the region. Regulators have a leading role to play in this regard. While the situation is gradually improving, uptake of insurance in the Pacific remains low when compared to global standards. It is in large part due to underdeveloped insurance markets that are hobbled by poor market infrastructure in some countries, the lack of legal framework, and inadequate consumer protection regimes, to name a few. To my knowledge, no Pacific country has an existing legal framework specific to index insurance. This needs to quickly change if we are to capitalize on the potential benefits of index insurance. As such, this publication is a welcome development that is also relevant for ministries of finance and agriculture, meteorological and disaster management departments, insurance companies, fintechs, mass market service providers, and potential distribution channels, such as banks, microfinance institutions, agri-businesses, and farmers' organizations, and reinsurance companies. Information is power, and I encourage my peers from the Pacific region to use this knowledge product to guide the implementation of index insurance through well-designed policies that strengthen our resilience against climate change, climate-related events. I believe the report will be a crucial resource for many years to come. Congratulations once again to UNCDF's Pacific Insurance and climate adaptation program for supporting the region in developing climate disaster-related solutions as successfully implemented in Fiji. We look forward to your continuous support in developing and implementing similar solutions across the Pacific region and the cross-sharing of information and lessons learned. We are proud to partner with BICAB in the most forward-looking endeavor that aims to ultimately create a stronger and more resilient region while equipped with the tools and knowledge to cope with natural disasters. I now have great pleasure to jointly launching this report on index insurance best practice guidelines for insurance regulators and practitioners with UNCDF and Access to Insurance Initiative. Favitai, and thank you very much. Good evening.
We thank the Assistant Governor for his words of commitment and support for launching this comprehensive knowledge product. We are again extremely thankful to all our partners for making this knowledge product possible through your continuous support and commitment. Ladies and gentlemen, a link have been shared on the chat box to access this publication. We will also share the same on email after the session. We will now move on to the technical presentation. We invite participants to post your comments or questions on the Q&A and chat box, and we will attend to that after the presentation. I now invite Mr. Agrotosh Mookerjee, who is the lead actuary for Risk Shield Consultants Limited, to take us through this presentation. Mr. Mookerjee, over to you.
Thank you very much. Yeah, so if it's possible to share the presentation as well, please. So thank you very much for inviting us to this webinar today. And so greetings, of course, to my fellow speakers from UNCDF, A2II, the Central Bank of Samoa, and other representatives of insurance regulators and central banks and practitioners in the Pacific countries, many of whom we interviewed during this study as well. So maybe just as a quick note on the overall approach we took to this study. So we basically, we used a combination of researching the existing best practice guidelines. We reviewed the regulations and legal frameworks which have been applied to parametric or index insurance in many different countries across the world, in Asia, Africa, Latin America. We also had a look at the regulations in Europe. And then we had many really interesting interviews with central banks of about 10 different countries in the Pacific region, which were enormously helpful to give us ideas about the types of areas which could be relevant. And I'm very pleased to see that now the report, the final report, which is being launched here, will certainly, I think, be very useful for practitioners as well as regulators in the Pacific Island countries. But beyond that, I think this would also be a very important guide globally for practitioners and regulators in other parts of the world as well. So in this session, before I forget, I also want to acknowledge, of course, this is a team effort, and there are many other team members at Risk Shield who are involved in the production of this report. So I see some of them are online here as well. Arpita Das, Peter Reddy, Sosan Eskandar, Zirada Pangoli, and others as well. So many thanks to the entire team. So in this session, I want to explore or just outline some of the key topics which could be relevant for insurance practitioners as well as regulators. So if we move to the next slide, please. These are not a comprehensive list of all of the topics, but it's just to give a kind of flavor or a sneak preview of the types of topics which are there, and the ones which are quite relevant for different types of stakeholders. So to start off with, I think there are many different topics here which are relevant for insurance companies, reinsurers, indeed distribution channels as well, and other types of service providers. And of course, some of these topics are also extremely relevant from a regulatory perspective and from government's policy perspectives as well. But yeah, I mean, maybe keeping the focus on the insurance service providers and insurance companies. So these are some of the topics which we have explored in the report. So one key theme that comes up across the report is we feel that it's important to broaden the scope of index insurance. So although a lot of the times index or parametric insurance is applied, more to the agriculture sector and to farming, but indeed a lot of the same types of products would be very applicable in other sectors which are extremely relevant in the Pacific Island countries as well as other parts of the world, such as renewable energy and tourism, retail sector, so on and so forth. So I think this theme comes across in the report, that we look at different sectors for which index insurance products would be very much applicable. And then we also look at the different types of products in terms of micro level products for individual customers or maybe groups of customers, as well as meso level. We do look at the meso level options or the concept of meso level products quite a bit in different parts of the report. So where essentially the policyholder and the beneficiary may not be individuals, but it might be institutions or companies or local governments and so on. So I think those are some categories which are very much relevant for insurance providers to consider, because often the tendency might be to focus on individual customers rather than also looking at institutions and other regional level customers. And then, of course, we also look at the different product categories that was alluded to in the opening speech. So we do look at the different types of index insurance products which could be applicable. And then we also look at potentially combining different types of index insurance or combining index with indemnity under in certain circumstances. Then there is a lot of focus in the report on basis risk, justifiably, because as the comments from the Central Bank of Samoa said that the basis risk is, of course, a very important consideration, both from the regulatory perspective as well as from the insurance company's perspective, from the client's perspective, of course. So we look at some ways of managing basis risk. So these are really ideas of how basis risk could be managed both before they occur as well as after they've occurred. In general, we also encourage and we outline some ways in which insurance service providers should question the rationale and approach behind product design decisions. So indeed, in many cases, the products are not being designed by insurance companies. It could be by technical consultancies or service providers or even reinsurers, which is fine, and it makes sense given their experience in these sectors. But it's important for the insurance companies to actually interrogate and look at the rationale behind many of these product design decisions, such as the data being used, the risks being insured, the choices made on the product parameters, the level of payouts, the way that the processes function, like the actual premium payment, the claims payment, and so on. And then it's also very much important at the end of the day for the claims to be, for the customer to have a good claims experience as and when claims arise or when a loss event occurs. So we also have several claims settlement good practices that we talk about, whether the payouts would, the different payout structures, whether there would be scope of having partial payouts, fallback methodologies to use in the event that data is missing from particular sources. We also look at some aspects around the time limits around which, by which claims can be payable. At the end of the day, how are claims calculated? How easily is that data available, and how quickly can claims be calculated for the payment of the claims? And also some ideas around potentially having penalties in case of delayed payments and so on. So these are, I would say, these are ideas and some suggestions based on what's been tried out in other parts of the world as well. And then we also look at the scope of, or the importance of aggregating these products responsibly through different types of distribution channels and aggregators, such as financial institutions, agribusinesses, farmer associations, or other types of associations and cooperatives, and what could be their potential roles, as well as, very crucially, what could be their potential business case for which they might be interested in playing a role as an aggregator. It's important for the service providers to consider the scope of digitization, of course, of different key processes. And increasingly, digitization is becoming almost an essential feature of both index insurance as well as other types of inclusive insurance products. The report also contains quite a bit of strategic advice for insurance companies on aspects to consider around product quality, around basis risk, around innovation, different ways to innovate, the different types of innovation which insurance companies can consider, overall their business plan and strategy that they can consider in the short term and long term, some of the partnerships they they could consider as well as the processes that they could use for premium collection, claims payment, and other key processes. Finally, there is quite a few points on consumer education. So recommendations on different ways in which consumer education can be carried out, different key generic messages, and also types of potential tools. So these are some of the key relevant topics for the insurance service providers. And then finally, when we move on to the other category of stakeholders, which might be very much interested in this report, which of course is the insurance regulators, as well as other government institutions and ministries. So these are, again, some of the different relevant topics for these stakeholders. So when it comes to the regulator, the insurance regulator, there is quite some information in the report around how of the importance of differentiating index insurance and financial derivatives. What are the basic differences? And that would, of course, also have an effect on what regulatory regime the products actually fall under. And the different types of index insurance products, so both in terms of whether they're micro, meso, or macro level, as well as whether they are weather indexed or yield indexed, hybrid approaches, or products covering non-meteorological risks like earthquakes and volcanic eruptions, which are also very much relevant in the Pacific Island countries, of course. So we talk about these different ways of differentiating and defining the product categories, because that would also be very relevant to understand under what regulatory framework the product categories would actually fall under. And then, of course, we also look at, we cover the topics of ensuring insurable interest. So the different ways in which the regulators can look at ways of avoiding a conflict of interest between the ultimate beneficiaries and the aggregators, or having limits on the actual coverage, and so on. Very importantly, we look at what are the features of a good index. So from the regulatory perspective, are there some checklists they can use to, to assess whether an index is good or not, in the context of the data sources being used, or maybe multiple indices being used as ways of improving the accuracy, but also with single indices, the different criteria which could be applied as to whether an index is robust enough or not. And then other consumer protection features, which are very important from the regulatory perspective, we also cover. So topics like disclosure of the product details, use of deductibles or excesses, the process in place for reporting of complaints and queries, the way in which the sum insured value has been set, the payout levels have been set, and many other features which would basically influence the consumer protection aspect of these products. Finally, or another aspect that we look at is on the distribution or aggregation modalities. So the ways in which the regulators could basically enable responsible aggregators and distribution, such as the licensing regimes that they could consider, or the kind of training or qualifications that aggregators might need. Also, the aspect of avoiding onerous fees on aggregators, and indeed the transaction cost as well of aggregators being involved. Also, an important topic we look at is different ways of distribution of these products. So whether the products could be done on a voluntary basis or a mandatory basis, bundled with other services, or on a standalone basis. On the prudential supervision front, we look at some of the topics covered are actuarial pricing, the reinsurance approach that insurers are using, the importance of avoiding very low rates and also very high premium rates from the product quality perspective, the reserving methodologies used, the types of payouts which could be expected in very bad catastrophic events, the solvency considerations as well. So these are some of the topics which which is covered in the report in the context of prudential supervision. And then moving on from the regulator, when we talk about other types of government support, so one of the topics covered is around premium subsidies, which is a very important and relevant topic for this type of product, especially as if it is being targeted to low income people. So with premium subsidies, we talk about some of the considerations which could be relevant both for the regulator as well as other stakeholders at Ministry of Finance and other ministries as well, such as the targeting of subsidies, the eligibility of beneficiaries and indeed insurance companies for subsidies. Also some of the alternatives to premium subsidies, such as premium pre-financing and tax waivers, for example, or tax reduction. And also the beneficiaries' awareness and reasonable expectations around premium subsidies. So these are some of the subtopics covered under premium subsidies. Apart from that, for the Ministry of Finance, we look at some of their other potential roles, such as integration with agriculture financing, regulations linked to financial inclusion, disaster relief as well. So integrating these products with disaster relief and with other social protection measures such as cash transfers. We also look at potential roles for Ministry of Agriculture, such as providing better access to data, yield assessments in the context of different types of agricultural insurance products, extension services, farmer level sensitization, and also, last but not least, the potential roles for the meteorological departments, again, related to the ease of accessing data, potentially validating other types of satellite and remote sensing data, the role they play around weather data infrastructure, weather forecasts and crop advisories as well. So given the breadth of all of these topics, we don't go into most of the topics into a lot of detail, but we hope that there's sufficient detail in the report to give some ideas to regulators and practitioners and to stimulate future discussion and analysis on the same. So thank you very much for listening, and I look forward to any questions that you have or any comments. Thank you very much.
Thank you very much, Mr. Mookerjee, for that very comprehensive and informative presentation. If I may request you to keep your video on, and I will invite Mr. Pandey to join you for the Q&A session. We have a few questions on the Q&A box, and I will take them through one at a time. Thank you very much. So our participants, feel free to continue to post your messages or your comments, your questions on the Q&A box or the chat box, and we will try to answer all of them. We will go through the first question on the chat box or on the Q&A box. So the first question is relating to data being a key element in the construction of parametric insurance. And as we all know, in the Pacific, this is a key challenge in terms of getting the data in order. What would be a recommended historical basis to be used in the construction of index-based insurance? If Mr. Mookerjee, you can answer that, and Mr. Pandey, feel free to add on.
Sure, thank you very much. No, that's a great question. I think, yeah, data is always a challenge, I think, everywhere in the world, but also, yeah, in the Pacific, it's definitely a challenge as well. I think one of the interesting things we've seen in both during this study and some other associated work is, well, of course, it is a challenge in many ways, but there is also a lot of data available. So there was another analysis carried out on, the risk modeling of the Pacific island countries, where we analyzed, satellite-based data for about 12 plus different sources, which could be used for measuring parameters like rainfall and wind speed, humidity, temperature, and so on. So there is a lot of data out there, but from different satellite sources, and indeed this is the case also in throughout the world. The key is, of course, to test the accuracy and skill of the data, because there could be 20 different sources of satellite data available, but maybe 18 of them are not very accurate or not very relevant for that context. So it's important to test the skill, and for that, it's important to also access the ground weather station data, other types of data like yield data if it's related to agriculture, loss data, and so on. So in short, there is a lot of data available. There is also weather station data available in some countries, in particular, such as Fiji, for example, relatively. But of course, it's important to test the skill and accuracy of the data to make sure that it's fit for purpose. Yeah.
Mr. Pandey, would you like to add on?
No, Agrotosh is the real expert on this, so I can just concur with him on this.
Okay, wonderful. So we'll move on to the next question. According to your experience, what is the typical minimum number of micro-level clients to make an index insurance product profitable for all parties involved, excluding development costs?
Okay, yeah, so that's an interesting question. So thanks, Roland, for that question. I think it's very difficult to say, to be honest, because it depends on many other factors, like what is the sum insured level. So sometimes you could have micro level clients, but if they're MSMEs, for example, or even farmers, but with fairly high production cost or expected yield, then the threshold could become lower. I think roughly, very, very roughly speaking, I would say the experience in countries in Africa that there's at least 1,000 clients insured at the same time. It starts becoming profitable for all parties concerned. But of course, I think even 1,000 clients on its own, it may not, it might have to be combined with other business lines, or for example, to justify a reinsurance treaty. So for 1,000 small-scale farmers, for example, it may not justify having a reinsurance treaty with a very strong reinsurance company if the total premium level is still very low. So, but that doesn't mean it's not viable. It could be if, for example, it's then combined with an existing treaty, maybe linked to commercial farming, for example. So it's difficult to give an exact number, I would say, but I think in the realms of about 1,000 and above, I think it can start making sense.
Again, I can only concur. The only thing I can add on this is, like, pricing then becomes key, because ultimately projecting for the scale and making sure that the pricing reflects everybody's interest and sustainability, just adding on to it. So it's the number and the affordability that can be expected in the market. I think those would be key drivers.
Thank you, Mr. Pandey. So we'll move on to our third question on the Q&A box. Should any regulator choose to regulate microinsurance or index insurance, what are some of the high-level fundamentals that a regulator should look into for particularly in the Pacific region or in the Pacific context?
Manoj, do you want to go first, and I can add on?
I can definitely answer on the higher level on why regulators can choose or should choose to regulate inclusive insurance or index insurance. I think first and foremost, it's about the signaling that you provide. Like if you are regulating inclusive insurance or index insurance, you're offering indications that that the market is open for such solutions, and that gives the insurers something concrete to go by. So that's something that is perhaps, I think, one of the biggest advantages of having, if not explicit regulations, but also some kind of guidance on something could be a first step towards it, on, that the regulator encourages it. Because it is also necessary to have regulations from what, it is not any different from why the regulator should be regulating any other kind of insurance or service out there, in terms of making sure that the market is stable, that the consumers' interests are protected, and the like. So I think regulations are important, but in a balance, in the sense that they are not stifling, and they are more encouraging, while ensuring that the consumers' interests are protected. And I would defer to Agrotosh on the more specific context, given he studied the region.
Sure. So yeah, I think I concur with all of those points. I mean, it's very important for the regulator to basically enable new types of products, and to enable the testing of new products as well. But I mean, in addition to that, I think it's the aspects of consumer protection, or to understand how the products are being developed, so the process used, and to what extent, for example, issues like basis risk, and also other issues like the overall setting of trigger levels, the methodology used behind the pricing, the benefit levels, how these different product decision factors were arrived at. I think that aspect is important. And then, of course, the regulator should also consider or look at some of the ways in which the product is being marketed, or the information that is being disclosed to the aggregators, to the end beneficiaries. Yeah, and then of course also from the prudential supervision side, it's very important for the regulator to also look at ways in which the insurance companies are managing the risk on their side. So, for example, whether they're using reinsurance or not, or how exactly they are reserving for the products, and so on. So I think those are some of the high-level fundamentals. And then in the report, I think we go into a lot of detail on these different categories and the different topics which the regulator should consider within these categories. Yeah.
Wonderful, thank you. I think it's quite important for regulators to be able to apply proportionality, as well as balancing risks and innovations coming in through the insurance space. Well summarized, and thank you for that. And my apologies again to Roland. I hope you had your question answered. We'll move on to the next question from Selasa Wendinga. Is there any specific prudential policy or supervisory guidance for index insurance in the jurisdictions that you have looked at, or in any particular jurisdiction that you know of?
Yeah, so I think, okay, so related to index insurance, in the jurisdictions we looked at, I mean, in the Pacific island countries, there isn't actually much currently on, looking at like specifically related to index insurance in terms of Prudential supervision guidelines. But there are quite a few guidelines for example, in other countries. So we looked at regulations in countries like Kenya, Uganda, in Mongolia, in Philippines, and many other parts of the world, in Mexico. And indeed, in many of these jurisdictions, there are guidelines on the prudential supervision, and also to look at, in fact, a lot of the regulations is actually focusing on the managing the risk for the insurance companies. So there is less related to consumer protection, but anyway. So I think that's something which is there in many of the countries, that there are guidelines on the prudential supervision. Yeah.
Mr. Pandey, would you like to add on?
I can just add that, A2II has a couple of reviews of regulators from Asian, African, and Latin American markets, where, we have spoken to them in terms of how they are looking to supervise and regulate index insurance solutions and the kind of challenges that they face and the like. So just adding to what Agrotosh is saying, if you want to get a wider sense of, what are the areas of concurrence amongst insurance supervisors and regulators in emerging markets, and, what are some of the obvious challenges that they face, and how it is evolving over a period of time, I could encourage you to look at a couple of reports that A2II has produced. It's available on our website, and I'll be happy to sharing the links to those as well.
Wonderful. We are a bit pressed for time, so we'll try to run through the questions very quickly. And participants, we have your contacts, so we will try and link you up with the presenters or the panel, should you wish to have the conversation or take the conversation further. Just going through the Q&A box, have any good practice on indexing-based insurance in Asia Pacific area? I'm not sure if that question makes sense to you. If not, perhaps we can move on to the next question from Ali. What should we address while discussing with regulators while developing index insurance regulation?
So maybe a quick one. I think on the Asia Pacific, there are, maybe if it's about case studies in the Asia Pacific on regulations, there are quite a few actually. I think one that comes to mind from recent work is Nepal, where there is quite a lot on the regulations that the Bima Samiti has been doing in Nepal. And that's one, but there are many others. Philippines as well has done quite a bit over the years. And for the question from Tariq, I think, so when discussing with the regulators, I think it's about addressing the concerns of the regulators, and then also of sometimes maybe, so usually when it comes to the regulatory approval of these products, the regulators may not have a very specific framework in most countries currently. But I think if from this report, practitioners can get ideas of the types of topics which could be of interest to the regulators, whether at the pilot stage or scaling up. So I think it'll be important, or it could be useful for practitioners to sort of preemptively address some of these topics to the regulators in the absence of a specific framework currently. Yeah.
So we'll move on to the next question. Being from a media background with an interest in development communication, top-down approach, the PCAP project is interesting because it empowers people at the grassroots level who often fall through the cracks. It's early days yet, but what has been the response from the recipients and from the private sector so far in Fiji? I can perhaps, if Krishnan is still around, if you wish to respond to that.
Yeah, thanks, Akata. I'm still around. Of course, I'm not a panelist, but then I can respond on behalf of the program. Of course, Dr. Singh has mentioned in his comment, it's still early days, but the response has been quite good from the grassroots level people, because we actually started with a baseline of 0, because there was no products at the micro or the meso level, and year after year, whenever there were extreme events, people were left to fend for themselves or wait for some external assistance that took quite some time to come. We have so far not had a trigger event, but all the ecosystem activities for making a timely payout are in place, and therefore that should give confidence to all the partners in the mix that we can respond. Not only the program but the insurers who are the primary underwriters and the partners in this initiative can respond quickly if there was a major event. Having said that, there's a lot of product awareness as well as insurance awareness to be done in the market, and I'm glad to know that quite a number of cooperatives and agriculture agencies are active doing exactly that. And I think in the coming days, we should see tangible results of this happening in the form of increased enrollment. Thanks.
Thank you, Shailendra Singh, for your question, and thank you, Mr. Narasimhan, for responding to that. We have two more questions. So we'll start with Amit Garg. What are some of the good regulatory practices that promote the delivery and access of parametric insurance to low-income populations? Example, making digital delivery or agency delivery easier.
Yeah, so I think, in terms of the delivery, I think we looked at this in the report quite a bit, like the different types of distribution channels which could be relevant and aggregators, and also their potential roles. And then of course also what could potentially motivate them from their business case perspective. So I think in terms of some of the experiences that's been experienced in different countries, there are, when it comes to these types of products, there are many different types of delivery channels which could be applicable. So of course there are the financial institutions, banks, MFIs, maybe especially those which have a particular exposure to the types of risks being insured, as well as agribusinesses, associations, cooperatives, and so on. And then there are others. I think there are some distribution channels which are less sort of leveraged currently, like the renewable energy sector, for example, and also others which could be quite applicable. So I think those are certainly there, as well as digital as well. Of course, that there are the digital channels also very much relevant. There are also some limiting factors which sometimes apply with having a product that's purely digitized. But of course, at the end of the day, I think digital channels will play more and more of a role going forward, I think. Yeah.
Wonderful. Thank you, Agrotosh. So we will go on to our very last question, and I think this is a very important one. What are the best practices from your experience in terms of marketing index-based insurance at the micro level that promotes product stickiness and manages expectations of beneficiaries, particularly when they might experience losses during the events that doesn't trigger payouts? This is from Mr. Sakiu Sanambo.
Okay. So I can, well, I think this is a very important question. So I think, well, of course, I mean, the question is referring to a situation of basis risk, for example, potentially. So, I mean, with basis risk, there are quite a few different ways in which of dealing with basis risk, and we talk about some of these in the report as well. So so this is more related to the product development process. So knowing exactly where the beneficiaries are, having better GPS coordinates of locations, actually knowing what are the most relevant risks. So maybe, so to one of the reasons that basis risk can also occur if the relevant risks are not being covered, or the frequency and severity of the risks are not being taken into account. and other aspects as well, such as the product structuring that is done, the level at which the products are priced, for example. So typically very cheap products often have higher basis risk compared to more expensive products. But then the question is also talking about marketing of the product. So I think this is very important because, I mean, even before it gets to marketing, I think there's a lot of work which needs to be done on overall financial literacy and education. So with the financial literacy and education, that also can help with the customers having reasonable expectations of insurance and then really of index insurance. So there's a lot of, I think it's important to have, a lot of overall financial literacy, and then also to communicate the product in quite an efficient way. So I think sometimes this, the mismatch of expectation versus whether the product paid out or not also comes about because, there is not a more continuous communication with the clients throughout the season, for example, and so there it's more a question of at the end of the season there is no payout, and then people are asking why. So it's important to have a communication strategy in place and to communicate, of course, when there are payouts, but even when there are not payouts, when there are no payouts, and to explain the reasons why and so on. So I think with more communication, the visibility of these products can be improved significantly, which can help with managing some of these issues. Yeah.
Wonderful. Mr. Pandey, would you like to add on or any final statements?
No, I mean, just adding to what Agrotosh was saying, I think communication becomes key. If you leverage technology, mobile phones and the like, and keep people updated on, what are the, how the index is being tracked with the weather conditions that are existing. And with technology, we will get better at it. And that brings a degree of tangibility to what it is happening, and that just aligns the expectations better. And I think ultimately right now, that's one of the key things, how the alignment of the customers and, their perception of value while buying an index insurance solution fits in with, the costs that they have to incur in accessing that service and, whatever comes with it. And that just gives me the perfect segue to again say that, the publication like what we have launched today could go a long way in making sure that implementers of such programs and regulators would very clearly understand that, because that is something that is very well brought out in the report as well as people would see. And I think that's a great takeaway from the report as well. Thank you.
Well said, and what a way to end this session. Distinguished guests, ladies and gentlemen, fellow participants, unfortunately, time have caught up to us. We have shared my email address on the chat box, so if you have burning questions or you want to connect to our panel, please feel free to reach out to me, and I'd be happy to connect you through to our experts. Ladies and gentlemen, on behalf of the organizing team, I would like to sincerely thank you all for availing yourselves to attend this virtual launching event of the Index Insurance Best Practices for Regulators and Practitioners in the Pacific Island countries. I wish you all well, take care, and a big vinaka vakalevu.